Hello and welcome to Gold and Silver Assets. I'm Diora and it's Sunday the 13th of March 2022. Quite a few alarm bells have been ringing in the financial world lately, haven't they? Let's take a look at some of these. Well, there's certainly some fireworks in the nickel market this week, eh? For the past year, as you can see from this chart, nickel has been trading between $16,000 to $22,000 per ton, that kind of range. Then, of course, this happened. Ooh. Actually, this chart isn't accurate. The price actually went up to $100,000 per ton. Now, why didn't this show up on the chart here? Well, for the first time in its 145-year history, the London Metal Exchange basically suspended trading in nickel. And at the moment, there's no indication of when it's actually going to restart. Now, not only that, they retrospectively cancelled trades that had already occurred. So I'm not aware that that's ever happened anywhere before. Basically, those who were long and had closed their trade during that time window won't get their payout. Ouch. Now, there's lots of aspects to this story, such as big short positions, hedging, physical delivery, counterparties, etc. It's quite an interesting story. But for me, the big alarm bell is the retrospective cancellation of completed orders. Now, that's something that seemed pretty new to me. And it kind of signals that rules are being changed at will to suit the system. If we ignore all these shenanigans, will this kind of price here have an impact in terms of the price of goods? Well, let's take a look at nickel price on the larger time scale. Now, this one actually goes back 30 years, but it only includes the price up until January, so it doesn't include the big price spike. Now, the current price is actually off the top of this chart here. So it's basically an all-time high. Nickel is mostly used to produce stainless steel and other alloys. So yeah, it's a pretty important metal that we all use. If prices don't come crashing back down to roughly the 20,000s level, and if, say, higher prices are sustained, then I think, Houston, we have a problem. Alarm bells also continue to ring where food is concerned. So here's the chart for wheat, and this is on a log scale, and it goes back to 1971. And you can see that wheat is currently at all-time highs right now. Now, the worry here is that it closes above this long-term upsloping channel and remains above there. Of course, look, we could be lucky and price just settles down and comes back within here. That will be wonderful. But I don't know. I just get the feeling that we're in for higher prices up here. So, yeah, you're looking for a sustained break above this channel. See, over here, it poked above it, but it came straight down. It didn't really close above it. So that's what we're looking for here. This is a pretty strong candle. So, yeah, watch out. Fertiliser prices are also rising quite rapidly. Of course, these costs will filter down to the consumer. Yes, we've already seen increases in grocery bills, but I reckon that there's much more to come, basically. I've said that a few times. I think this is just the beginning. So you could say, look, is it just inflation that's raising the nominal costs? Well, according to this chart, the answer is no. So in yellow here, what we've got is the food price index in nominal terms in orange, and in yellow we've got it in real terms. And you can see that it's coming up towards kind of getting a new 60-year high over here. So yeah, it's not purely inflation in terms of the food price. Energy. yes, the oil price has continued to rise, and interestingly, that hasn't actually gone above its 2008 peak here. We've still got further to go to get to that peak there. This looks like a pretty strong uptrend, I think you will agree. And so I actually fully expect this peak here to be surpassed at some point. I mean, obviously it's going to zigzag, we're going to get pullbacks. Maybe here we're going to get a pullback down to about 80 or 90, maybe, before resuming a big leg. I think the next leg could be rather large. So that's a bit of a worry. Now, although the price that you pay at the pump is correlated to the oil price, that isn't the whole story. In New Zealand, the petrol price at the pump in 2008 was $2.11 per litre. And right now it's around $3.25 per litre. Even though the oil price is a bit lower than it was back in 2008, you can see that this number is obviously much higher than it was back then. So what explanation do we have for this? Well, there's two factors. Firstly, we have taxes. So between 2008 and now, new taxes were introduced. And the other thing is that the local currency is now weaker against the dollar than it was back then. Remember that this country does not produce any oil and it imports all of it. And so the fuel price is vulnerable to currency fluctuations. Are they likely to cut the tax to reduce the burden on consumers? I very much doubt it. Remember, unaffordable energy can cripple an economy. As I've spoken of before, the Federal Reserve Economic Data website no longer provides the price of gold. I tried searching for it in the discontinued section and it's not there either. There's no sign of it whatsoever on the website. I even tried searching the term "why gold price discontinued from Federal Reserve Economic Data website" and came up with this. Mainly talk of discontinued money supply here. But yeah, no explanation. Now, one of our viewers actually heard that the data from a certain provider had been removed, but no reason was given for that apparently. Now, my issue with all this is that the gold price is widely available from many services. I mean, if companies such as TradingView and Kitco and so on can display gold price, both current and historical, surely what is arguably the most important financial institution in the world can provide it. I mean, if there was a top 10 of parameters that I would want on that website, gold price would be one of them. Its absence basically makes it, well, it reduces our ability to analyse what's going on, doesn't it? And so why haven't they replaced it? For me, I consider that another alarm bell. Reduced transparency in the system. So, in conclusion, manipulation, suppression, rule changes, grifting, these are all things that have always been around, granted, but they're also things that tend to get worse in an inflationary environment. Seems to me it's becoming more and more brazen too. Next up, the market update. Let's start with gold priced in US dollars on the daily scale. And what a week that was. Yeah, we had a big spike up since we last spoke. It came within a gnat's crotchet of the all-time high just up here, didn't it? It was very, very close. And of course it dived back down again. It got rejected at that level. And so the big question is this run up real or fake? And if it's fake, what do we look for? If it's real, then what can we expect next? How far do you think this is going to go? Now, of course, the most obvious kind of line in the sand is going to be this trend line here, which we've spoken about on a number of occasions. So see my previous videos if you haven't seen that. So we don't want price to go below 1800. I actually don't think it's going to get close to that. So then the next thing is, well, if we are in the beginning of an uptrend here, then this will just be a correction before it resumes its next leg up, which is what I think is going on here. And so I'd consider myself to be wrong if we drop below this line here, and then you can expect big drops there. So now someone asked me to talk a bit more about Fibonacci numbers and so on. So, okay, one of the problems with using Fibonacci, they are useful, but they also have flaws. So the problem with this is knowing where you're going to start and where you're going to finish. So what I've done here is use this low as the start and this is the finish. But is that correct? I mean, should we be using this? So that's the first issue. And when we're talking about this top level here, we're assuming that this is the local top. I mean, what if this just comes here and this is spring back and carries on, and the real kind of top is further up? So you've got to bear that in mind. So I'm going to work on the assumption that this is correct. This is one leg up, in which case we're looking for about a 50 to 60% kind of retracement back here. So I'm thinking around this 1920 level before it turns around. So I do think, you know, there's two possibilities here. If this was the top, then correction down to there is likely. I think that's the most likely scenario here. But remember, there is the possibility this can keep steaming up a bit further before it kind of retraces itself. Now, why else could we think about that 1920 level? Well, there's a couple of reasons. So one, if we think that it's going to turn around from here, of course we've got quite some support over here, but it's not particularly strong. These are just kind of little spikes. Further down here, we've got a bit more support. So we've got kind of this area here, maybe a little bit here, but obviously a fair amount here as well, and a bit further back. So there's more support at that 1920 level there than there is at the moment. But look, I mean, we've got a big lower wick here. And of course, that was the 38.2% retracement there. Okay, so next, I want to look at the same chart, but this time I'm going to be looking at the volumes. And so this is the price by volume chart, but also at the bottom I've put the volumes over here as well. And one of the things to note is that from this point here, you can see volumes just increased dramatically. It's not minor. And so to me, that tells me that this is a significant move here. You know, I mean, I'm hearing some people talking about this turning around and dropping down here. To me, this kind of suggests otherwise. Obviously, there's never 100% thing, but I think this is the start of the next bull leg up. So again, if we look at the support levels, what we want to do is look at where the volumes are. And so the next kind of volume, this volume bar here is about 1930, and this one is at about 1900. So, you know, again, that would fit with the last chart about 1920, 1930 as being the kind of next turnaround area, if we're thinking about that. So yeah, look out for that value, I think. And silver, so this is in US dollars on the daily scale, and we'll do a similar thing. This is in a nice short-term uptrend. If we assume that this is the top, how far down can we go? I'm thinking about 2450 here. So that's the 50% retracement level. We've also got some support here and also back here, and possibly even further back if you look here. So yeah, so what might happen is we could do something like this, and then this next leg up will be pretty large. If it might not even go that low, but you know how volatile silver is, so I tend to kind of overestimate. I try not overestimate, tend to go for the larger possibility rather than the smaller one. The smaller one is a bounce off of 25, which is possible because you've got a little bit of support here as well. But yeah, I'm just feeling more towards that 24.5 level. And again, if we do a volume analysis on this, interesting, that 26 line, I mean, we drew that ages ago, didn't we? And that's been pretty useful, actually. You can see the price has kind of danced around that quite a number of times. And again, it seemed to break through, but it just got rejected again. And so it's struggling a bit at that level. So we need to surpass that before we get to the next stage up. So downside, again, in terms of volume, that shows why it was resistance there. A little bit of support over here, but really the major support level here is at 24. So we're thinking something like this. And just to return to that descending triangle model that we'd spoken about. So this is in silver in New Zealand dollars. And I did this just because the triangle and just the whole pattern is so much neater than it is in the US dollar. And the breakout occurred within the estimated time frame. Nice big volumes as well on the breakout. So this is all looking positive. And with these breakouts, again, you can expect a retest of this before resuming upwards, but it doesn't always do that. And the target is much, much higher, above 50 here in terms of New Zealand dollars. So yeah, I'm still bullish in all of this stuff, but expect pullbacks. And remember, volatility for the precious metals goes up during a bull market. So expect a real roller coaster ride, okay? And here we have the GDX. This is on the daily scale, and we've broken out from this downtrend, which is well over a year old, probably about a year and a half now. So we broke out of it over here and moved up nicely and hit some resistance at 40, which this area here kind of predicted, I guess. And the question is, are we turning around here? If we are, then I'd probably looked coming maybe to about 35 here. So that would be that 50% retracement there before moving up. And then we have the silver junior miners, similar story. And again, you know, the reason that we're talking about this being a potential top here, in the short term anyway, is because of this very long wick and how price got pushed down and it hasn't really regained that level yet. So if we do go down here, I'd be looking about 13 level if it gets that low before moving up there. And yeah, I think that's it. That's it for this week. So we kind of concentrated mainly on volumes and Fibonacci this week. Someone asked about doing cup and handle discussions. I'll do that. I'm thinking of doing a kind of trajectory video, and I think that would be good to do it there because that's more of a much more long-term kind of pattern that we're looking at. So that will be coming up at some point. Right, that's it from me for this week. All the best and see you next week. Bye.